Hi everyone, my name is Josephine. Welcome to this channel, and thank you for being here. Today we're diving into a high-stakes, fascinating world, the audit of stockbroking. Think about it. Trillions of dollars flow through these institutions every day. The integrity of the system is what allows you and me to invest with confidence. But what happens behind the scenes to ensure this confidence is well placed? What stops a firm from taking excessive risks, misusing client money, or simply making a catastrophic error? The answer lies in a rigorous, specialized process, the stockbroking audit. Over the next couple of minutes, we will pull back the curtain. We'll explore the unique risks these firms face, break down the three core pillars of the audit, and discuss why this process is absolutely vital for protecting not just the firm, but the entire financial ecosystem. Let's get started. First, let's understand what we're auditing. A stockbroker or broker-dealer isn't like a typical company. Its core functions create unique risks. They hold your assets. Your cash and securities are in their custody. This creates an immediate, fundamental duty to safeguard them. They execute your trades. This involves complex systems and exposes the firm to operational errors. They lend you money. Margin trading is a huge source of revenue, but also of credit risk if a client's portfolio plummets. They sometimes trade for themselves. This proprietary trading exposes the firm directly to market risk. So, from the get-go, an auditor isn't just looking at financial statements. They are assessing a live, pulsating system of risk. We group these risks into four key categories. 1. Credit risk, the risk a client or counterparty defaults. 2. Market risk, the risk the firm's own trading positions lose value. 3. Operational risk, the risk of failure in people, processes, or systems, a trade error, a cyber attack, a settlement failure. 4. Compliance risk, the risk of violating the mountain of regulations from bodies like the SEC and FINRA. Understanding this risk landscape is step 1. The audit is designed to probe each of these areas deeply. This brings us to the first pillar of the audit, ensuring financial fortitude. SEC rule. Think of this as a financial buffer. Its purpose is simple but critical: to ensure the broker-dealer has enough liquid capital to absorb losses, wind down its business in an orderly fashion, and protect its clients and creditors without taxpayer bailouts. So how do we audit this? This is a highly technical area. First, we recalculate the entire net capital computation. The firm must calculate this daily. We take their latest calculation and verify every single component. This includes verifying assets, ensuring only allowable liquid assets are included. Testing haircuts. This is crucial. Regulators assign a haircut or a discount to the value of securities the firm holds. A volatile stock has a larger haircut than a government bond. We ensure these haircuts are calculated correctly according to strict regulatory schedules. Checking subordinated debt. We review any loans to the firm to ensure they are formally approved and can truly be treated as capital. The goal here is to give a clean opinion that the firm is and remains in compliance with this vital rule. A breach here is a red alert that can shut a firm down. The second pillar, the sacred wall, customer protection rule. If the first pillar is about the firm's health, the second pillar is about client safety. This is governed by the most important rule for investor protection. This rule creates a sacred, impermeable wall between the firm's assets and the client's assets. The firm can never, ever use your fully paid shares or your excess margin cash for its own business purposes. Auditing this is a top priority. The key procedure is auditing the customer reserve formula. Each week, the firm must calculate how much client cash it is holding that is obligated to be protected. It must then deposit this amount, in cash or qualified securities, into a special bank account, literally called the Special Reserve Bank Account, for the exclusive benefit of customers. Our job as auditors is to recompute this entire formula. We trace every number: client debit balances, Client credit balances, amounts payable to clients. We ensure the math is flawless and that the resulting cash has actually been wired to that special account. We obtain direct confirmations from the bank. Furthermore, we perform circularizations. We send direct letters to a sample of clients, asking them to confirm their cash and security balances directly to us. We then match their responses to the firm's books. Any discrepancy is a major red flag. This pillar is the bedrock of trust in the entire financial system. Our audit is the verification of that trust. The third pillar, the web of compliance and operations. Beyond capital and custody, the third pillar is a wide-ranging examination of the firm's operations and compliance. This is where we get into the nitty-gritty. We look at several key areas: trade execution and settlement. We sample trades from the initial ticket to final settlement. Was the trade executed at the correct price? Was the commission calculated correctly? Did it settle on time, or was there a fail? We look for errors and operational bottlenecks. Margin lending. We select clients with margin loans and recalculate their margin position. Did the firm issue a margin call at the right time? Was the collateral valued correctly? We review the process for liquidating a client's account if they default. Anti-money laundering, AML. This is critical. We review the firm's entire AML program. We test their Customer Identification Program, or CIP. We sample suspicious activity reports, or SARS, to ensure they are being filed appropriately when red flags are detected. Best execution. We review policies and test trades to ensure the firm is making a genuine effort to get the best possible price for its clients when routing orders. This part of the audit is about proving that the firm's day-to-day operations are not just efficient, but also clean, fair, and compliant. In today's world, we cannot talk about auditing without talking about technology. A stockbroking firm is essentially a technology company with a finance license. A system outage can be catastrophic. A cyber breach can be existential. Therefore, a modern audit includes a deep dive into IT general controls. Who has access to the trading system? How are changes to critical software managed? And most importantly, cybersecurity. We review the firm's cybersecurity framework, its incident response plan, and reports from external penetration testers. We need to assure ourselves that the digital vault holding client data and assets is as secure as the physical one. So, let's bring it all together. Auditing a stockbroker is not a simple check-the-box exercise. It is a specialized, risk-focused mission built on 3 pillars. 1. Financial fortitude, ensuring the firm has the capital to survive. 2. Client safety, verifying the sacred wall protecting client assets is intact. And 3. Operational integrity, confirming that the business runs fairly, efficiently, and within the rules. This process is more than just accounting. It is a vital function that promotes market stability, protects the individual investor, and maintains the confidence that allows our capital markets to thrive. It's a challenging field, but a profoundly important one. Thank you for your time and attention. If you found this video is useful, please do share it with your colleagues, friends, and feel free to subscribe to this channel. Thanks again for your support, and have a nice day.